All right, so oil prices are hanging on to their rally, boosted by those fears of a potential conflict between Washington and Tehran. They're still down around 15% from its April high. After slipping into a bear market earlier this month, investors were more concerned then with global growth prospects. Ted Hall is a senior market analyst for oil industry expert Kairos. He joins us live now from Paris. Ted, thank you so much for being with us. So yes, we are all talking about the fact that oil prices are higher, but you have to put this into the broader context. Oil has actually been down quite a bit this year.
That's correct. In today's oversupplied crude oil market, any escalation in supply risk and geopolitical risk has a dampened effect. So without further escalation in tensions, without further risk that we're closer to an actual physical disruption of supply or flows, we'd expect prices to fall back off relatively quickly.
So how close are we, do you think, to a noticeable dip in supplies if tensions between the US and Iran continue to escalate?
It's not really, we don't speculate on that at Kairos, but we do monitor how much interruption there is currently in the global supply market. And even though geopolitical risk is high, the actual interruptions are relatively small, with the notable exceptions of Iran and Venezuela. Even geopolitical risky countries are supplying either at full rates or close to.
So how much of an important factor is the US supply of oil? A lot of people are saying that if it wasn't for the fact that the United States had increased its oil productions, you might even see oil prices at $100 a barrel right now.
That's absolutely the case. So if you look at today, between 10 years ago, 20 years ago, it's a radically different regime. And oil production in the U.S. is growing at an even faster rate than it was in 2014 at its peak. So today we're 1.5 million barrels a day, higher than we were the year before in production in the U.S., and we're expecting that trend to continue. So again, anywhere OPEC had a lot of power before, as far as when disruptions could come off and geopolitical risk had a big impact in price, that's a little bit more dampened today because of the growth in production stateside.
So the increase in oil prices we're seeing, I just want to point out the broader context for our audience. It comes at a time when you have sanctions against Iran and sanctions against Venezuela that are dampening down supplies. Just walk our audience through that.
Sure. So with sanctions, it's difficult to find customers for your crude oil. It's that simple. So Venezuela is still moving crude to China and to Russia and to India, but with additional pressure on those customers, specifically India, those flows could be interrupted. And in Iran, it's a little more difficult, but we see in our monitoring at Kairos of Iranian production through flaring and through their storage in tanks, we see signs that the market may be underestimating the amount of production they had today.
All right, Ted Hall, live for us there. Thank you so much. Appreciate that.